This conference will now be recorded.
Okay. Oh, sorry, 11th March. Fine, no problem. So today we are going to discuss on foreign currency revaluation. This is most important topic. What is this foreign currency revaluation? Means, suppose take the example, you are planning to purchase a laptop. You are planning to purchase a laptop. First, I'm explaining the concept and then we'll discuss about the application, how it works. Suppose you are planning to purchase a laptop. Here in India, you have inquired. So it is around, once it is inquired, you got it that information like the laptop cost is 80,000 rupees. It is touch screen and 360 degrees rotate, and there are so many features. Okay, it is 80,000. Now you have verified with your friend in USA. He is in USA and you have verified with your friend. Then the cost of the laptop is, he told, like 1,000 US dollars. 1,000 US dollars. Then immediately you have verified what is the current rate of US dollars versus INR. You Google it immediately. Your friend told like 1,000 US dollars. Then what is USD to INR? Quickly you have verified. Okay, it is 73 rupees. It is 73 rupees. Okay, good. 73 rupees means immediately you have calculated the conversion. Then it is 1,000 multiplied with 73 rupees. Then 73,000 I'm getting this laptop. Okay, good. For 73,000 I'm getting, I will get a profit of like 7,000 because here in India it is 80,000, there it is only 73,000. So I'm getting profit of 7,000. You thought like this. Okay. So you have information, you have informed your friend like, please purchase one laptop. Please purchase one laptop. Fine. He purchases a laptop and he came on. Suppose like he is not coming in this month. He is not coming in the month of April. He is coming in the month of May. So in the month of May, he came to India and he has handed over the laptop to you. And he then at that time, unfortunately, there is something happened in India and 1 US dollar equal to 85 rupees. 1 US dollar equal to 85 rupees. Then like your friend is asking like $1,000, pay me $1,000. Then you need to pay $1,000. Then how can you pay? You need to spend 85,000 rupees, Indian rupees, and you need to collect 1,000 US dollars, and you need to pay $1,000 to your friend. Otherwise, suppose like this one laptop, now suddenly our rupee value is increasing very strongly. Suppose US dollar became 65 rupees. After 2 months, it is 65 rupees. Now your friend is asking $1,000. You will spend 65,000 rupees and you will collect 1,000 US dollars and you will pay this $1,000 to your friend. So in the first scenario, it is a loss. You have assumed like 7,000 profit, but it is 5,000 loss. It was became 5,000 loss. But second scenario, the dollar rate is like our Indian rupee is becoming strong, then 65 rupees, then you are getting a profit of 15,000. You are getting a profit of 15,000. So here, sometimes you are getting profit, sometimes you are getting loss. Whether your friend has told like wrong information? No. Whether you did any mistake? No. Because of foreign exchange rate, foreign currency exchange rate. I mean to say, $1 is equal to how much exchange rate? Because of this exchange rate, sometimes you are getting loss, sometimes you are getting profit. In the same manner, if I am doing business, if I am doing business, if I am doing import or exports, if I'm doing imports or exports, at that time, because of this exchange rate, my company may be like getting more profit, sometimes less profit, gain or loss may be happened. Understood? Okay, we understood like little bit brief about mobile, like one laptop. Now we will try to understand business. Okay, here what we will do, if you are importing material from USA or Australia or Singapore, any country, something, for if you are doing some import, then what you will do, you will create a purchase order, you will do purchase order confirmation, then you will do product receipt, then vendor invoice, then vendor payment. So here during this process, vendor invoice and vendor payment, during this process there will be a gap. Once invoice is happened, you will not pay immediately, you may pay after a few days. Then there is a gap, because of that there is a exchange rate differences happened. So at the time of invoice, one exchange rate is available, at the time of payment there is another invoice, another like exchange rate. Because of that I may get loss or gain, I may get loss or gain because of the time difference between invoice and payment. Understood? Invoice and payment. So those changes you need to update in the system using foreign currency revaluation. In detail I will explain you. So to run, you need to run the foreign currency revaluation in AP module, because you are doing purchase process. Okay, suppose take the example on 15th, today it is 11th or 10th March 2021. Okay, I will do like, now we are doing in US dollar, like in USDM, USMF company. What I will do, I will import €1, like 1000 euros. Okay, I will create one vendor. I will create one vendor. Suppose that vendor currency is euros. Our company is in USA. Then €1 equal to how many dollars I will enter. On 10th March, €1 equal to, I will enter some 1.25 US dollars, something. Now on 31st March, if the exchange rate is €1 equal to 1.20 US dollars, then what happens? On 30th April 2021, 1 euro equal to 1.30. Then what happens? How much amount I need to pay? If I'm paying on 15th May 2021, on that day exchange rate is, suppose, 1 euro equal to 1.35. Then what happened? We'll see this process. Okay, let me create a vendor and let me show you this process and what happens one by one step. Let us understand. Okay, so for this company, USMF company, we have discussed this one earlier. Accounting currency, GL, general ledger, ledger setup, ledger. What is the accounting currency? US dollars, and reporting currency also US dollars. We'll do one thing, this process will do in SPLC because we have two different currencies so that we can understand. USD, euro. Okay, what I will do, in this case, I will do from INR. I'll make it, I would like to show you differences between accounting currency and reporting currency and transaction currency. Okay, then transaction currency, one is transaction currency, another one is accounting currency, another one is reporting currency. Okay, so let me take this as INR. Then this is fine. And one more, the same concept. Initially now 73 rupees. Now I will change it to 75 rupees. Next I will change it to 78 rupees. And I will change it to, okay, otherwise I will make it 70 rupees, this one. And finally it is 69 rupees. Here some profit or loss it will be there. Okay. So if I took INR, it will be easy for you. Okay, fine, no issues. Here, $1 equal to, suppose, 85 rupees. ₹87. Here, 80 rupees. 82 rupees. And 80 rupees. Okay. So accounting currency is INR. Sorry, transaction currency is INR. Accounting currency is US dollars. And reporting currency is euros. Any doubt in this? Any confusion? I'm going to do all these setups quickly. So transaction like a triangulation currency, I will discuss after this one. I will explain triangulation currency. I think Neelu is there. Neelu is asking me triangulation currency. Yeah.
Yes, I'm here.
Yeah. Okay. Fine. So I will discuss this one triangulation currency also after some time. After this one, first I will let me explain this one. All these things.
Okay.
Yeah. So clear to everyone. Okay. Now in SPLC, it is accounting currency is US dollars, reporting currency is euros. Okay, and I will create a one vendor with INR. So they are importing, USA is importing from India. USA is importing from India, maybe some raw material, okay, or medicine or something. Fine, let me create one vendor with INR. International vendor group I have selected. Now currency will be automatically US dollars because company currency is US dollars. Now I'm changing to INR. I'm changing to INR. Okay, I have created a vendor called 003 Rama Electronics. From India, USA is importing. USA company is importing. Okay, now the ledger form, general ledger form. You have mapped accounting currency exchange rate, reporting currency exchange rate. So you need to go to accounting currency exchange rate and exchange rates. So you need to filter. Our accounting currency exchange rate is this one, USD versus INR. So let me filter by US dollars, USD versus INR. So what I'm doing now, I'm entering exchange rate as per our setup. Today it is suppose 10th March. So I will do on 9th March, 09 March 21. Zero 03, I think it is 0309, 030921. So 1 US dollar equal to 73 rupees. Okay, next 0331 21. Now exchange rate is 75. Exchange rate is 75. Then 30th April 21, sorry, 04. It is 75. Sorry, 80 or 70. Okay. 70 rupees. Then 15th May 15th, it is 69. So here, if you enter like 6th, it will show those details. So March 9th, 9th March 73, 31st March 75, April 30th it is 70, and May 15th it is 69. Okay, this is for exchange rate between accounting currency and transaction currency. Transaction currency versus accounting currency. This one. Transaction currency versus transaction currency versus accounting currency. Accounting currency versus transaction currency. Next, reporting currency exchange rate. Of course, the same, but you can have differently. So you can click here. This is maybe a differently, but now it is same, but it may be different in real-time scenarios. That is your wish. Now euros into INR. Okay, so now 030921 exchange rate is 85. Next 033121 exchange rate is 87, 87 and 82. Okay, 87. Next 82. Next 15th May 80. Okay, if you enter here, it will display. So 3rd March, sorry, 9th March 85, 31st March 87, April 30 it is 82, May 15th it is 80. Different exchange rates. So for transaction currency versus accounting currency setup here, transaction currency versus reporting currency setup here, and if you want differently for budgeting, you can have different budgets. Okay, now you need to map the gain or loss here. Gain accounts or loss accounts you need to map here. It will be in 8 series. So realized gain, realized profit, realized loss, realized loss, realized loss, loss realized, unrealized gain, unrealized loss this one, unrealized profit this one. 8014, realized unrealized loss, unrealized loss. Okay, these accounts you need to create in your whenever you are migrating the data from old system to new system, legacy system to new system. These accounts may not exist, then you need to propose some accounts. Okay, in old systems you may be like the client may be maintained in the old system they may not have foreign currency revaluation process in their old system, then they may not map, they may not created this ledger accounts, so you need to propose this ledger accounts. Fine. Okay, And remember, recalculate ledger periods should be executed at least once in the very first, not now regularly. When the one time, it is a one-time job, you need to execute this one. I think I have explained this one in the company creation process. Okay, so many people, they will miss this one. Because of this, so many reports and so many problems will come into the picture. Okay, now, so what we did, we have mapped the exchange rates and we have mapped this one. Now what I am doing, I have created a vendor already, one vendor. Now I will create one purchase order and I will do the verify the report. Let me go to duplicate. I will do a purchase order. So let me do a purchase order. So you can do from procurement sourcing purchase orders, or you can do from accounts payable purchase orders. Anything is fine. I'm clicking a new one. Selecting the vendor, international vendor. So USA company is importing this material. What happened? Okay, I'm selecting the item. Some item, suppose any item is fine. Actually, we will not export actually this Microsoft Surface. They will export to us, but practically it is different. So let me enter some 1000 items they are importing. Okay, 73,000 INR. So if you look at the header, it is INR. Okay, lines. Now do the confirmation. Now, before going to proceed, if you want to verify, you can verify what is the total amount. It is 73,000. Oh, it is huge amount. Huh? Each one is 73,000. Then I don't want to do for those many items. I would like to do for 10 quantity. It is very huge amount. That means 7,30,000. So USA company is importing from India. USA company is importing from India. So they need to pay money in INR. So it is 7,30,000 Indian rupees. 7,30,000 Indian rupees. Okay, now product receipt. I'm doing product receipt. Click OK. Why it is telling this one? I'm sorry, my click is not working properly. Fine, product receipt is updated. Now I'm doing invoice. Generate invoice. Okay, post. Now invoice, it is 7,30,000. Fine. Now let me go to take a duplicate. Let me take the duplicate. If you verify the vendor account, if you verify the vendor account, what is the balance we need to pay? 73,000, 7,30,000 is the balance in INR he need to pay. That is transaction currency. Now if you look at the vendor, if you look at the transaction balances, it is 7,30,000 INR they need to pay. I mean to say, like they are importing, and in terms of US dollars, it is 10,000. In terms of euros, it is 8,588.24. This is conversion between this one to this one. Okay, that is we have configured. Now calculator, 7,30,000 divided by 85. It is 8,588.24. Understood? Any doubt in these calculations? Clear? Any doubt? Now, because I have like a USA company imported this material, they may not pay immediately. After 3 months, they are paying. There is a terms of payment, some conditions. They are going to pay 3 months after 3 months. Now, actually, because exchange rate is changing, every month I will generate balance sheet and profit and loss account, trial balance. At that time, I need to verify what is the current rate and what is the loss or profit. I need to arrive. So to do this one, we need to run foreign currency revaluation. Accounts payable module, periodic tasks, foreign currency revaluation. I am running this foreign currency. You can use simulation. It is for view purpose. You can use foreign currency revaluation directly if you want. Either one you can use it. Okay. Consider date on 31st March. And date of rate exchange, date of rate is 31 only. Here dimensions, there are 3 options. None means Forget about dimensions. Table means at the customer level, sorry, vendor level, in the vendor account, what are the dimensions are there? Consider the dimensions. Posting means consider the transaction dimensions. Understood?
Okay, Satya, I have a question here.
Yeah.
You see over there is a method.
Hmm.
What is the best practice that you should actually take in terms of when you run evaluation, if anywhere the dimensions are not there, the system doesn't post the evaluation. So what are the best practices to pick up the filters so that the dimensions can appear in the evaluation?
So dimensions are which one? Sorry, come again. Last
See
point.
the dimensions are already there at the transaction level, right? Yeah,
So
but when you
there
run
are. First, let me
yeah,
clear this one. Okay,
yeah,
posting means
yeah.
in the transaction, whatever the dimensions are there, those dimensions will be considered for the foreign currency evaluation. Posting. Table means it is in the vendor master, whatever the dimensions are there, those dimensions will be considered. None means it will not consider dimensions. Is it clear first?
Yes.
Okay, now tell me. Here, tell me. Yeah, standard, minimum, and like invoice date. Tell me now, what is here doubt?
No, okay, so
Hmm.
those
Yeah. Hmm.
posting profile and dimensions is fine. Method, what is the best practice to use? Minimum, invoice date, and standard. So which is the best practice to use for currency revaluation?
Usually we'll use the standard only. Usually we'll use the standard. Invoice date is actually, I don't want foreign currency exchange rates. I want to execute in the last month, but I want to reverse in the 1st of April. 31st March I did it like for my report, for like trial balance or balance sheet report. I have executed the exchange rate for the standard. On 1st of April I want to reverse. Then we can do this invoice date. Invoice date will be, it will be reverse the transaction earlier, whatever you have executed on 31st March, it will be reversed on the 1st, because in the invoice date whatever the exchange rate is there, that should be considered. Got my point?
Okay, okay, got it.
Yeah, minimum we will not, I have not used. I will verify and I will let you know tomorrow. I will get back to you tomorrow. I will validate and I will verify. But standard and invoice date is because on 31st March we have entered exchange rates and I want to reverse, then it will take the invoice date, then it will be reversed. Clear these two? Okay, I hope it is clear. Okay, fine. Records to include, usually we will execute for all vendors. We will not use the filter, but for practicing purpose, of course only one vendor is there. So for understanding purpose, try to do filter for one vendor, so that you can understand what you are doing. Otherwise, in the real time scenario, we will not use this filter. We'll execute for all vendors and click OK. This is for calculation purpose. I'm doing for one vendor. So I don't know, the keyboard is taking some problems. Please bear with me. So it is telling like, without dimensions you are proceeding. Do you want to continue? Because I have not selected any dimensional combination. Okay, fine, no issues. I'm proceeding. At this point, dimensions is not the priority now. So now if you verify the voucher, some transactions are posted. One is exchange rate for accounting currency, exchange rate for reporting currency. One is vendor will be affected and gain or loss will be updated. So it was gain. Exchange rate gain is posted. The reason behind, now he is going to get more amount. Okay, he is, I mean to say, here 75 rupees. Now let me show you earlier, like vendor account, vendor balances. Let me refresh. Give me 1 second. Sometimes it is not refreshing properly. Vendor balances. The original value 7,30,000 will not be changed. Okay, he is going to get 9,733.50. The reason behind, Indian currency is now 75 rupees. Okay, it is 75 rupees. So now the calculation is 7,30,000 divided by 75. So he will pay 9,733 to India company. 9,733.50 only he will pay. Why it was 50? Okay, the reason behind the let me verify. This is 1.10 we have mapped. So in the realized gain or loss, sorry, in the general ledger parameters, we have mapped rounding figure 0.10. I think general ledger parameters, ledger setup parameters. It was mapped 0.10. Then why it is showing this one? 79733.50. 1 second. It should be 9733.333. It was rounding to somewhere else. So maybe somewhere else it was mapped, rounding differences. Let me verify, because this environment is handling by many people. Somewhere else rounding is there. That is the reason it is coming with 50. It should not be 50. It is 33 only. Okay, somewhere else it will be there. So we will deviate the functionality. First, let me focus. Now 7,30,000 divided by 87. 7,30,000 divided by 87 now. 8,390.80. This amount should be paid by this like this company to the Indian vendor. Now it is a gain for them. Instead of 1,000, 10,000, he is paying 9,733.50. So instead of earlier it is 8,400 something, now he is going to pay 8,390. It is euros. Understood? Now if you verify the transactions, it will clearly show. If you verify the transactions, it will show you the transactions. One is the original value and another one is in INR. It is INR means 0 only, there is no change. But in US dollars, he is going to gain 266.50. In euros, he is going to gain 197.44. This much amount he is going to get profit. Understood? So if you want to see the voucher, you can see the voucher. One is for accounting currency, one is for reporting currency. So 1 and 3rd, one set, it is for accounting currency. Sorry, reporting currency. This is for reporting currency, this is for accounting. Any confusion? Clear? Any confusion? Next month, suppose I will run this one. Every month I need to run this one. 30th of April, I will execute once again. 30th of April. Indian rupee is becoming strong. When compared with the original, Indian rupee is becoming strong. Now let me run this foreign currency revaluation once again on 30th of April. Okay, now I'm running once again this foreign currency evaluation. I'm executing. So it is telling like you are not selecting dimensions. I'm proceeding because I'm not concentrating on dimensions now. Now, if you verify here, what happened? The earlier transaction will be reversed and the new transaction will be posted. The earlier transaction, whatever it was posted, it will be reversed. Now, new transaction will be posted, the new exchange rate. Now, if you go to the voucher transactions, voucher balance, vendor balance, if you refresh, there is one more transaction will be posted. This is reversed. Earlier it is debit, now it was credit. Earlier it is debit, now it is credit. Now one more debit transaction is posted. Now if you verify the balances, it will show as per the new balance. So 7,30,000, 7,30,000 divided by 70 now. Then he need to pay 10,428.5857. Of course, there is a rounding is happening. So 10,428.50. If it is euros, conversion 7,30,000 divided by 82 now. It is 8,902 he has to pay. So what happened? You need to understand. Earlier, whatever it was exchange rate is entered here, those will be reversed. It was posted. XXX will be reversed. Understood? It will compare this versus this one only. Invoice date versus the current date. Whatever earlier it was posted, this will be reversed. So here also, you need to understand this one first priority. Reversed YYY value and created some NN value. Understood? That is, you need to understand, that is the major important. So in this vendor, already posted transactions, whatever it was posted earlier, it will be reversed. And now new exchange rate, original transaction versus current exchange rate, whatever it is there, those will be posted. This is foreign currency revaluation. This will be executed until you do the payment. If you are not doing payment, it will be continued, because so whenever you have paid this amount, then it will be changed. So now as per our exchange rates, 15th May is, suppose I am paying on 15th May, then suppose 14th May there is a exchange rate, now I am doing 15th May or 16th May something. So let me do a payment. Accounts payable, payments, payment journal. So I'm selecting vendor payment. Go to lines. Select the vendor. So let me change the date. Suppose 16th May I'm paying, or 17th May, because that is Monday, I'm doing payment. So this company is paying Indian rupees 7 lakhs. So if you want, you can select the invoice. It is 7,30,000 invoice value. So 7,30,000 will be paid. So using bank. So I'm doing for cash time being. I don't want, you know, that process like bank check generation. I'm doing payment. I'm doing cash payment. Actually, bank payment are fine. Anything is fine. Now look at this one. The payment is 10,579.50 in accounting currency. Okay. Now the vendor, like in the US company, will pay 7,30,000 rupees only, because the invoice is generated for 7,30,000. So they will pay 7,30,000 only. They are paying. So I'm doing payment. Now payment is completed. Now if you verify the vendor transactions, refresh, this will be reversed. This will be reversed, and the final result is 579.50 is loss. He has paid 10,579.50. So let me do the calculation. 7,30,000 he has paid Indian rupees, divided by, using conversion 69. Then he has to pay 10,579.71. He has paid that much amount, 10,579 point. Actually rounding somewhere else it is there. I need to verify. So they have paid. So ultimately this is the last amount. And for this is 536.76 is a loss. He need to pay instead of 8,588.24, he has to pay this much. Means it was converted. He will not pay this amount in euros. It is a loss. He is calculating internal purpose. This is the amount. Now if you run the foreign currency revaluation, it will not include this transaction because payment is done. If the payment is not done, as long as the payment is not done, it will be continuous. Once the payment is done, then it will be stopped the transactions. Understood? This is foreign currency revaluation. This is foreign currency revaluation. Same process in the sales side. Vendor side and sales side, customer side. If it is a vendor side, it is an international vendor you are importing. If it is a customer side, you are exporting the material to the customers in the abroad countries. Any doubt in this process? Okay, fine. There are two things I need to explain you. One is we understood like AP foreign currency revaluation and AR foreign currency revaluation also same, vice versa. You can do practice. You can do practice with AR side. AR side foreign currency revaluation also it will be available in the accounts receivable side module. Here periodic tasks foreign currency revaluation. Okay, so AR and AP I have explained. AR you need to practice. Tomorrow I will discuss about in 15 minutes or half an hour I will discuss about cash and bank and GL, how it will be the foreign currency valuation. Okay, how it will be foreign currency valuation. Now tomorrow I will explain about dual currency functionality. I think I have explained or not. I did not remember, but I will refresh dual currency foreign currency dual currency functionality. This is most important. We'll discuss this tomorrow. Okay, cash and bank and GL, foreign currency revaluation and dual currency, dual currency functionality I will explain tomorrow. Next, what is this triangulation currency? This triangulation currency is applicable for Europe companies. If your company is in Europe, that means if you are running your business in Europe companies, we need this triangulation currency. Why? Suppose my company is in Switzerland. My company is in Switzerland. Then I will use accounting currency. Accounting currency is euros, and reporting currency will be used as US dollars, as this is an international currency. I will use it. If I'm exporting material to India, then transaction currency will be INR if I'm exporting to India. If they are exporting to Singapore, then Singapore dollars. If they are exporting to Australia, Australian dollars. If they are exporting to Dubai, AED, Arab Emirate dirhams. If it is Malaysia, Malaysian ringgits. If it is exporting to Oman, it is Oman riyals. Like this, there are so many. Okay, so I traveled almost 7-8 countries. That is the reason I know very much familiar with that currencies. I traveled in Dubai, I traveled Gulf countries, I traveled Singapore, Malaysia, I traveled Europe countries like Spain, Netherlands, and France, some other countries, and US also traveled. Fine. So this is transaction currency. Now, what is this triangulation currency? Actually, Switzerland has Swiss crowns. This is their crown, their currency. Now they want to calculate in Swiss crowns, but their international currency, their local, because euro is a group of countries currency, they will use euro as their currency. They want to see some reports in Switzerland in their own currency. Actually, because euro versus Swiss crowns, there will be fixed exchange rates. If it is Spain, they may have different currency. If it is UK, they have GBP. If they have some Netherlands, they may have other currency. Denmark, they will have some other currency. So each and every country has their own currency, but for them, they will not use these currencies. They will use euros as a transaction currency. Then they want reports in this one. Suppose they have mapped like Swiss crowns here, then it is fine. If they have mapped euros, like if it is accounting currency is Swiss crowns and your reporting currency is euros, then it's fine. It is not required triangulation currency. But if suppose I'm using accounting currency as euros and reporting currency is US dollars, and transaction currency means exporting or importing with different currencies, INR, AED, AUD, something different currencies. Now I want reports in US Switzerland crowns. Then in the system we have general ledger, Siri, keep silent. Okay, currencies, denomination currencies. In this, they can enter euro versus whatever their currency exchange rate they can enter. 1 euro equal to 0.01703 Cyprus pound. In the same manner, lira, multi-share lira, something, SKK, some other country, Czechoslovakia, something country is there, their currency. In the same manner, you need to create Switzerland crowns, Swiss crowns, something, SCK, Swiss krona. Okay, and they need to enter the exchange rate so that they can generate the reports. This is triangulation currency. So the farm name in 2012 it is triangulation currency only, the farm name, but in D365 they have renamed, like farm name is triangulation currency, but menu name is denomination currency. Denomination currency means triangulation currency. See, triangulation currency. So how can system will understand euro versus this one? Currently, if you go to currencies, if you click euro has this triangulation currency enabled. Remaining currencies will not be. For all currencies it will be disabled, but only for euros we have enabled triangulation currency. So euro versus Switzerland crowns, they will enter here. It will be fixed, it will not be changed continuously, it will be freezed, the fixed exchange rate only it will be there, that they will enter here so that they can generate the reports in their local currency. Is it clear? Triangulation currency, particularly Neelu, for everyone actually, but Neelu is asking this point very long.
Now that we know that it is only on applicable only on euro, we will check this out in I will check this out in my system and see in my entities how they are reflecting, because we have European countries and we have not, if uh, the enable of triangulation in currency, this will impact all entities, or will this impact only for the entity that you have euro currency and you have enabled that as a triangulation?
See, yeah, I will give you answer here. See, currencies, this currencies is global.
Correct.
Currencies is global. So here this currency, foreign currency revaluation, triangulation currency references will be enabled for all legal entities. It will be all legal entities. So if you want to use this one, as I told you, suppose your companies are following here Swiss crowns, SCK, and euros as this one, then they don't need this triangulation currency functionality at all. Am I right?
No, I didn't get that point.
Because
I didn't get that point.
Their local currency is SCK, Swiss crowns.
Okay. Okay.
Their reporting currency is euro.
Okay.
Then it is not required for them. They may not use it. But if they are mapping accounting currency is suppose for any country, their local currency, if they are mapping with the accounting currency or reporting currency, that is not required. Then reporting currency is, triangulation currency is not required. That local currency means for India, we can use only INR. Suppose US dollars is there, can I go on somewhere else? Can I purchase any item with US dollars? No. Agree with me? You need to convert.
Yeah. Yeah.
But whereas in Switzerland, you can use Switzerland crown currency to purchase any item, or you can use euros anywhere. Agree with me?
Yeah.
So local currency is Swiss crowns. Local currency
Yeah.
is Swiss crowns, and there is another currency for them. It is euros. So this their local currency. If they want reports, all reports, then they can map accounting currencies their Swiss crowns. Okay. So as per the international standards, if they are doing exports or imports, they need to collect money in terms of euros, but not SEK. Exchange rate is always, suppose they are importing material from India, INR. So INR will be converted into euros, and euros will be converted into SEK. Understood? This is
Yeah.
denomination currency.
Yeah.
So if they are using already SEK, this triangulation currency is, my intention is, triangulation currency is not mandatory. It's
Okay.
not mandatory to use it. Suppose my
Okay.
company is in Switzerland and I'm using SEK as accounting currency and reporting currency is euro, then I don't use triangulation currency at all. It is not required. All reports will be generated in SEK. All reports are generated in euro or USD, whatever it may be. It is fine. But the main concept is here SEK. Suppose SEK should be converted to euros and euros converted should be. INR should not be converted to SEK directly. It should not be. That is the main agenda.
So you mean to say on in the global level, when we have like 350 currencies combinations maintained on DAX, we only to make euro as a triangulation currency?
Yes, only triangulation currency means euro. That is the reason I'm telling you here. Only for euro it will be enabled. This will be enabled only for euro. We don't have triangulation currency for any other than currency. Euro, other than euro, we don't have any other currency in the world.
Okay.
Because
Okay.
group of countries, they have came into one group and they made it like euro as their international currency. Really, euro is not a currency for one legal and one country. Agree with me?
Yeah.
So it is a, to be frankly, virtual currency, but every country is mandatory. They are using euro as their local currency.
Yeah.
So now your question is like, suppose there is some other currency came as a triangulation currency, then what happens means, then application should be redesigned completely. Suppose India, China, Pakistan, India, Pakistan, China, Sri Lanka, all together they became one group and they have inaugurated one currency. Yes, we can use it. Then that functionality may be different. Now currently we don't have triangulation currency means only one currency, that is euro.
Okay, in that sense, what if we put euro as a triangulation currency? In
Hmm.
that case, a system will not have exchange gain and loss variance in USD currency when there is multiple currency used in the transaction?
No, it will be there as usual. Everything is there. But suppose this INR will have exchange rate SCK. Am I right? Normally.
Yeah.
But here INR should not, like Indian company will not pay in SCK. They will pay in euros only,
Okay.
because
Yeah, got it.
they want to make euro as a demand currency in the world rather than US dollars. Because
Okay.
suppose I'm traveling from India to UK, then first I am landing in Dubai, and then I am landing in suppose Netherlands or Denmark, and then I am landing to UK. This is my flight. Now I cannot carry Dubai currency and then Netherlands currency or Denmark currency and like GBP. I will carry US dollars, and I can use this US dollars whether I'm traveling to Singapore, or whether I'm traveling to Netherlands, I'm traveling to any currency. I will keep US dollars as a my like currency in my pocket, so that I can use this money in the airports. Agree with me?
Yeah.
So US dollars demand is increasing a lot because everyone is keeping US dollars. So in the same manner, euro they made like as a international currency for them, so that everyone need to use euros only if they are using exports or imports by Europe countries rather than their local currency. So
Yeah.
euro demand will be there in the market. For that purpose only, it was introduced as a triangulation currency.
Okay.
Suppose you are going to Europe trip, you are visiting Switzerland, you are visiting Spain, you are visiting Netherlands, you are visiting somewhere else. You can purchase one visa, Shanghai visa. Using that visa, you can travel all Europe countries, and you can keep euro currency in your pocket, and you can use this euros anywhere in the country, in all these countries, Europe countries. So euro currency demand is increasing. So euro will be converted into their local currency whenever they want. Okay. And one more thing, I want to tell you a small information. It is unofficial. Just I'm telling you. I stayed in Netherlands. Okay, almost 3-4 months. Now, when I have a bank account, euros. Then I need to pay penalty if I have US dollars more. I mean to say deposit, because they would like to consume the euros at the earliest. Interest rate, there is no interest, because their local currency has their own currency. If they are keeping euros, means it is not plus to them. So there is no fixed deposit interest for Europe. I mean to say, if I'm having euro currency as in then like Netherlands, if I have euros, if I want to make a deposit, no, I cannot, because that is a euro currency. Okay. So for them, they have their local currency. Fine. Whether you are able to follow this last point or not, leave it. But euro is only one currency in the world for triangulation. Remaining currencies are normal currencies.
Okay.
Fine. I'm stopping here for today. If you have any doubts, we'll discuss once again, Nilu. After session after 8 o'clock, we'll discuss once again about your concerns. Any doubts or something. Meanwhile, you can study
Yeah.
your system and come back to with me, like if you have any concerns or any doubts. Okay.
We'll raise it up tomorrow.
Tomorrow 7 o'clock only, 7 to 8, the same session. But your doubts
Yeah.
I will discuss after 8 o'clock.
Yeah, sure. Okay.
Anyone
Okay,
has any
thank you.
doubt? Yeah, welcome. Anyone, please? Balaji, Takir,
So
Venkat.
I have one doubt.
Yeah.
What is the good practice to make a revaluation for foreign currency and before payment or after payment?
No, see, always before payment. Every month end, see, every month end I need to run this foreign currency revaluation to get
Okay.
actual profit or loss. Every month, actually, for any organization, in the first week of every month, they will generate trial balance report. In the trial balance, they will arrive what is the current condition of the company. Then in the 31st March or 30th of April or 31st May, if I execute this foreign currency revaluation, then if it is any loss or gain, it will be updated, so that on first week of every month, I will generate the profit and loss account report, and I can see what is the profit or loss. Here it is not payment or invoice. So if it is invoice is done, payment is not done, then it will come into the foreign currency revaluation process.
Okay, got it. Thank you.
Okay. Yeah. Anything else, please? Anyone?
Is there any report like what is the loss or gain? So that will be in the trial balance.
Yeah, so it is actually in if you go to these transactions, you are getting some gain or loss for the accounts, am I right? These accounts, if you go to these accounts, you will get gain or losses. In the trial balance, it will show the loss or gain. For 801400, 801600, the gain or loss it will show.
Okay.
So ultimately the main goal is to get the trial balance, what is the gain or what is the loss, to see balances. So if you want, quickly I will show you, give me 1 second. If you go to trial balance, general ledger, reports, trial balance, the first one, it will show clearly what is the profit and what is the loss. So here it will show these accounts, these 4 accounts, in terms of accounting currency, in terms of reporting currency. So ultimately it was closing balance. This is a loss or profit, whatever it may be, it is a loss. Okay.
Thank you.
Yeah, welcome. Any more doubts? So exactly vice versa in AR side, exactly AR side, vice versa it will work. You can do practice with the AR side. Tomorrow we'll discuss about cash and bank and general ledger, what is the impact. Okay, I'm stopping here for today. We'll connect once again tomorrow morning 7 a.m. IST. See you. Bye.
Thank you.
Yeah, welcome.
Thank you, sir.
Thank you.